Is the creation of 1 million Trump homes the answer to housing affordability? Folks, I don't know if you read the news yesterday, but it is rumored that both Lennar and Taylor Morrison and other builders are working on a plan that could create up to 1 million new homes. The idea being to deliver affordable new construction. Now, again, these plans are very much on the drawing board. I will go through what little details we have here. Then we will talk about some of the ramifications because, again, there will be ramifications if this happens. But let's get into the proposal. So, first off, it looks like this will be funded by private investors. I would assume that is code for Wall Street deep pockets. What do I mean? Well, based on what I've read thus far, these deep pocket investors would buy these homes, or I should say, pay for these homes to be constructed. Then these up to 1 million homes would be leased on what I would call rent to own. Now, it will likely be called something else, but why do I call it rent to own? Apparently, these deals will be structured where part of the monthly rent is credited or captured or deposited as a future down payment. Think of this very simply as a $2,000 rent payment where maybe $250 of every month goes to eventual down payment. Then in the course of 36 months, that tenant can exercise their lease and purchase the property. Okay, so that is what little we know about this potential proposal. Now, again, we're just going to assume that our current outline is correct. What are some things that would happen if this were to occur? First and foremost, Wall Street's clearly got the money. They could clearly buy or pay for 1 million homes to be created. So that is a non-event, especially if they get to make a rate of return that is above what they can earn somewhere else, which, trust me, they will figure out a way to profit from this. Second, we would see a hiring boom. Think about today, housing, and suddenly you're going to add 1 million new homes. 1 million new homes over the course of probably what, 2 years, 2.5 years? We would see a hiring boom. We would likely see wage inflation. We would likely see lumber inflation. Has anybody checked out what Simon the Uneducated Economist is saying is going on in lumber? What happens if we unlock 1 million new homes? Even if they're small, even if they're 1,100, 1,300, 1,500 square feet, we would see inflation in building materials without question. So inflation in building materials, inflation in wages, and frankly, a lot more hiring. That would happen almost immediately. Next, when these products start to be delivered to market, what will happen? Well, you will see competition for tenants. You will see vacancies rise in Class A apartments. You will see vacancies rise in single-family homes, and you will see rent deflation. Yes, folks, if you unlock 1 million homes with the promise of eventual ownership, you are going to have the best of the best tenants very likely leave their Class A apartments. They will likely leave their Class A and Class B homes, single-family homes, and they will sign up for one of these lease option or rent to own or whatever you want to call that. So you will also see rent deflation. Now, the big question, what happens to home prices? Well, if you are finally delivering product to market that ultimately will land in a few years, you could potentially see some softening in prices eventually. Because again, remember, it will take time to build. These will first come out as rentals, not owners. So they're just another rental unit. You will only see a portion of these, hopefully half, maybe a little more, convert to ownership if you believe in historical lease option rates. So, net, frankly, I hope this happens. I have been saying for a long time, and frankly, when I was asked at Resi Day in New York City for my answer to housing, it was this. I said, we need to find a way to incentivize a GI Bill-like new home, entry-level new home development. And I don't care what you call it. If you want to call it Trump homes, if you want to call it Flag Day homes, I don't really care. Just get more entry-level housing that is affordable, and that would help the housing market. So net, I think it's a wonderful idea. Obviously, the devil is in the details. So we will pay attention to this. We'll check in with Lance Lambert tomorrow and see if he has anything else. We did get some earnings over the last 24 hours. We got AMD. They beat top line, bottom line, and raised. But once again, folks, they missed what often was called the whisper number. So AMD had some expectations. They beat them, but there's this whisper number that they missed. So they didn't raise enough, and their stock was pummeled. We are also seeing pretty much anybody in software, specifically SaaS, just get smoked. Are we seeing the signs that the AI bubble is bursting? I don't know. Time to pay attention. Chipotle beat top line and bottom line, but unfortunately Q4 traffic fell, and their guidance for next year, frankly, sucked. So again, expect a weak stock trade in Chipotle. Got some news about commercial CMBS that I wanted to share. Office delinquencies are over 12%. Retail over 7%. Multifamily just under 7% at 6.94%. And finally, lodging or hotels, 5.56%. I had thought multifamily would be higher, quite frankly, because I think Class B and Class C are in much more trouble than that. But not according to TREP. What else do we got? U.S. households. This is actually interesting. Is this a good thing or a bad thing? Is this a sign of a top or better diversification? You tell me. U.S. households own more stocks than ever. According to this research, 47.1% of American households own at least one stock. That is the highest on record. That is up 16.6% just since 2020. The AI bubble, the one that smashed me and caused me to lose 80% of my money, the high back then was 38.7. Again, today we are at 47.1. So is this a sign that America is bullish, or worse? Is this a sign that retail is fully invested and it's time for a crash? Let me know in the comments below. Let me know what you think. Is this just retail being overextended, or are we just set to run? I do not know if this stat is true. It felt good. I wrote it down, so I'm going to share it with you. Apparently, 33% of all millionaires never made more than six figures in a year. Again, folks, you do not need to make six figures to be a millionaire. You need to live below your means, stack discretionary income, buy assets, and hold. The key is hold assets. We did get some Fed speak. We got Fed President Moran. The Fed needs to cut rates by about a percentage point. That's interesting because just the other day, he had said 50 basis points. So now we're going from 50 to 100 basis points, or half to 1%. Fed President Bostic is on the other side. He says stabilized labor market is giving us space to wait. More on that in a minute. I do have a question for you watching this. It's a complete right turn, but it is something that I am actively thinking about. Have you ever done a HYROX event? This HYROX event, where you run 1 kilometer and you do 8 different stations and it ends with 100 wall balls. Have any of you listening to this ever done that? There's one in Vegas a week after my ORAD event, and I'm seriously consider doing one just to give it a go. So let me know if you've done a HYROX event. I'd love to hear from you. Any advice, coaching, thoughts, let me know in the comments below. Couple more things. We did get the ADP or private payroll data today, and it was ugly. We added just 22,000 jobs in January, far below the expectation of 45. Even worse, December was revised down. I know you're shocked. These numbers seemingly are always revised down. December was revised down to 37K. If you go inside the numbers, the only reason it was positive 22K was because of education and health services had a big 74,000 print. And who doesn't think that will be revised lower next month? I mean, come on. Are we not surprised by now? So again, very, very interesting. And then business and professional services, negative 57,000. Manufacturing, negative 8,000. And then finally, folks, I want to congratulate Victor, Frank, and Joy. Thank you for joining our school community. Make sure you introduce yourself. Folks, you're going to want to live stream the Vegas event. The only place you can do that is in school. The Zoom links are there. You have 4 of them, day 1 morning, day 1 afternoon, and so forth. I hope to see you there. Take advantage of this opportunity for only $20. If you want to game the system and only join for a month, so be it. That is totally okay. But I trust that you will see the value in the group, the accountability groups, education, and the like. And of course, don't forget to check out Steadily. Olivia and I just sent them 10 properties last night. Shout out Tyler if he's watching this. He's going to try to put together a portfolio for us, 10 units or 10 properties to see if they can continue to beat out on price. Thanks, guys. Hope you have a great day. Take care. Peace.